I hold a big position in AMD, but they don't pay a dividend. Here's why I'm okay with that. To just get a brief intro on AMD, what it is as a company, what it does, and where I plan for it in the future. This is a 5-year time lapse. As you can see, there's been some highs. Back in 2021, I had a high of 155, brought back down in 2023, but that's with most stocks. We're all the way back up to 207.39 is what it's saying. However, big downside from here. This is around where I bought in. I'm not down here. I'm not that smart of an investor, but I got in around the 140 mark, averaged down the whole time. Because if you look at the news for AMD, it's a lot and lot of good news. Microsoft and AMD's Xbox partnership. Bam. As we can see down here, the last dividend payout for AMD was back in 1995. And as a dividend focused channel, you may be wondering why I have a whole 40% of my position being in a stock that doesn't pay a dividend. Well, over the past few days, it has spiked up exponentially, had a 10% day on the 16th, and then another 5% day on the 17th. Now, that brought my portfolio, if you had seen the video before, from $4,098 to up to $5,091. Finally broke that 5,000 threshold. Now, before then, my last video, I was actually down on AMD. I was down, I think, 6%, maybe 7. But the past few days, with all the good news from AMD, there has been a huge upsurge in my portfolio value. And I know I don't show the options in here, but I was able to sell out a few of my option contracts for AMD that were really profitable. Now, because I believe in AMD's future goals, I believe it's going to get back to the $250 per share that it was not even a year ago. I still want to be able to cash in on some dividends when I know the stock is going to go up. So as you can see in my portfolio, I have this stock called AMDY. This is basically a YieldMax account for a portfolio that sells covered calls. Covered calls are when they have a majority of shares and they sell the calls at a certain price. If it reaches that price, they have to sell all the shares. But if it doesn't reach that price, they get the premium of the shares and they're able to reinvest that into a dividend. So as you can see right here, I'm currently down almost 19% on my position. However, if we go to over here, the dividend yield on cost. So the dividend yield on cost means that I'm going to be paid around 63% of my position in this stock at the end of the year in dividends per share. So that would very much make up the 19% difference and give some extra for income. Now, if we look at the analysis of AMD based on many people, it is going to be an upside, even still. So I'm currently profitable on this, saying that at the end of the year it's going to be a 130 average. That I can deal with. That is something that is very nice to me because I'm going in this for a long-term goal. I have around 16 and a quarter shares of AMD at 123.06. I am not planning to sell those until they reach the high of 200 at minimum. I don't care how long that's going to take. I don't care if that's going to take all the way until 2028, 2030. That's what I'm trying to say in this, is that we are long-term investors here. We're not investing for the short-term gains. We are doing option contracts, but only if we believe in the company itself. We're not doing day trading, tracking charts. Okay? So I strongly believe that AMD is a growth machine from here on out, even if not evident by the 10% days that we had. It's appreciating in capital value. I'm very, very happy with that. However, my dilemma is that I love to have dividends. No matter what, I like that passive income. I'm sure most of you are the same. So, Now to get into the other stock, the YieldMax account for AMD. Now, this is something that I do have to point out. You see this right here, this expense ratio? That means, I believe it's every month, this percentage of the position gets deleted in fees, right? Which normally case a 1.23% expense ratio is absurd. It's so much. However, the dividend yield is 97.62%. Now, I'm very much down in stock price for this position, but I've made, I think it's $130 worth of dividends this year. Sorry, so it's actually going to be 120 after this next dividend payment. However, if you go back to the other part of my portfolio, that's pretty close. But every dividend, I lose part of the stock price. So you saw that 62.97% yield. That is actually going to be taking away from the stock and paying me a dividend based on how much it took away from that stock. Now, this is usually good in a position where you believe the underlying stock, in this case AMD, is going to perform well. I've strongly believed in AMD ever since I've learned about it. It didn't get that AI pump that Nvidia did, and it's waiting on it. Now, AMDY reinvests the profits of their covered call strategy, which is great for cash flow and income investing. However, if the underlying stock, AMD, does not perform well, then it's basically forfeiting all the money you put into the YieldMax. So dividends are valuable, but you have to realize the risks and the returns that you can get with them. Now, all the YieldMax accounts on average, generally you never close out the position profitable in stock price just because of the crazy percentage dividend yield. However, I've seen this before with TSLY and NVDY for their pumps. They, after a certain amount of percentage in a small amount of time, like Tesla went up, I think 20% in 1 week. TSLY, I had a position in there since closed out. I was actually profitable in stock price for once, so I immediately sold that because that's not something that you see very often. Immediately afterwards, the dividend paid through that stock dropped it so where the stock price would be negative for me again. In most cases with dividend stocks, you are buying them for stability and income over time. However, with these YieldMax accounts, it is not stable and you have to very much be watching it. So this is a little bit against the passive cash that I want to be promoting. However, I do want nobody else to fall into the trap of thinking, oh, if I get this 72% yield account, or 62%, sorry, that I will just make a boatload of money off of it. No, because the expense ratio for the actual portfolio that is being controlled, because these are ETFs, they are ETFs with covered call strategies in them instead of separate stocks as a broad portfolio. But the compounding growth through DRIP isn't really understandable through this stock. Now, DRIP investing stands for Dividend Reinvestment Plan. Like for a lot of companies like O Realty Group, as you can see over here, I have a 0.19 position size in that. That is from the dividend reinvestment plan. Every week, or every month, sorry, I get a small dividend from O. As you can see, it dropped here because I sold part of my position. Each month, I get paid this amount, and it's automatically reinvested into the stock itself. This is great for long-term stocks like O Realty Income. This is something I'm going to hold for the rest of my life. I may go down and up in position size, but it is something I'm planning to hold for life. Same with SCHD. It doesn't look that impressive up here. However, the growth that goes along with the stock price as well as the dividends make it such a crucial thing for dividend investors. If you can just have a substantial amount of your portfolio in SCHD, seldom will it turn you in the wrong direction. So, now on to covered calls and why I don't use them. So covered calls are basically when you have 100 shares of the underlying security or the stock. That's super expensive. I have $5,091 in this account. I do not have enough. Even if I did have enough, I would probably have to chop off a good portion of my portfolio into just cash to pay for the stocks to get to the point to sell covered calls. And even then, the premium that I would be getting from that would very much depend on the market as a whole. Now, it is a great way to make money. It really is. But it's one of those cases where you need money to make money. And that's something that I plan to do in the future. But as you can see, that's probably not until 2026, 2027. And that's fast. Because selling covered calls, especially on AMD, if I were to try to have 100 shares of AMD at $126, that'd be $126,000 into AMD alone. That is substantially absurd. I do not have that kind of money to just throw around into a covered call. However, you can take advantage of covered calls by using those dividend yield ETFs. It is going to be very, very helpful in the income term, but you have to realize that the stock price will depreciate along with the dividends. Okay, so now let's talk about my target. So AMD, I want to hit $250 per share. That is the end goal. I don't care how long that's going to take. I'm going to hold all my positions in AMD until that is the case. Because if you look at the difference between NVIDIA and AMD, which I do want to make a video about later, there's very much not much difference in the two companies, other than one has a $1 trillion market cap and AMD has $1 billion market cap. Those aren't the actual numbers. I think NVIDIA is like 3.1 trillion and AMD is at like 300 billion at the moment. However, all these great news sources are praising AMD. Xbox partnership, Microsoft partnership. They just acquired a AI company as well. A lot of great news for AMD. Been pushed down with a lot of the bad news that's been happening recently. However, if it's still going up, that's all that matters. So, just keep in mind you don't have to choose between growth and income. There are many ways to diversify your portfolio into encapsulating both. You do need the right strategy. However, that is something that you're going to have to do on your own because I can't, again, I don't know what your goals are in investing. I'm just going to say my goals, try to help those who comment along. I'll try to help. However, keep in mind, I am not a financial advisor. I'm just someone who's trying to learn along with you, and I seems to be going well for the moment. However, I am trying to save you guys from the dividend yield ETFs that I got taken surprise by. I didn't do my research ahead of time, trying to save people the effort. So, most successful investors spread their money everywhere. As you can see from my portfolio, I have a lot of technology and ETFs. The ETFs are going to diversify my portfolio no matter what. SCHD and SCHG are both stock or ETFs that have, I think it's 100 or 150 stocks with both of them combined that they're doing. So again, SCHG, Schwab dividend or Schwab growth ETF, and SCHD Schwab dividend ETF. Those are two great recommendations for someone who's trying to get into dividend investing. SCHD, perfect. For someone who's looking to have an ETF that they won't have to look at all the time to wonder if they're making money, SCHD will be the stock for you. So, thank you again for listening along and watching along. And I hope I said something that was helpful in any way, shape, or form. But that's the end of the video. Thank you for coming and watching Dividend IQ. Go.